Alright, but today is the 7th of June, being a Sunday, and this video is simply just going to be doing a weekly review for the week that just elapsed. So from the 31st of May all throughout the 5th of June. So jumping straight into it, taking a look at the weekly time frame, we can see that the week's trading that has just passed been very bearish. So we've engaged with that 30,500 level, and that served as a point of resistance for price action to begin delivering down towards sell side. So we have the previous week low, previous week high, and we have that weekly opening coming in right here. So the week opened, we engaged with that previous week high as well as that 30,500 level, and we have very heavy deliverance down towards sell side, engaging with that previous week low. So paying attention just to this weekly chart, we can take acknowledgement to the fact that the previous week low, for one, is a devil's mark, as well as the fact that there's a new week opening gap that resides right there as well. That is a very, very clear draw on liquidity, very strong draw on liquidity as well, being a devil's mark as well as an unfilled new week opening gap. And then taking a look at the daily chart, so we have the week opening, that is blurry. We have the week opening coming in right here, and that's Monday, Tuesday, Wednesday, Thursday, Friday. So Monday, Tuesday, we have that deliverance up towards buy side. So Monday we open, we immediately engage with the previous week high. Tuesday continues that buy side delivery motion, and then Wednesday is the day that ignites for that sell side delivery motion. So once we drop down to lower time frames, we'll be able to see that point of inception that served during Wednesday's trading, inviting for that sell side delivery motion. Friday being a very, very heavy sell side delivery day. And with the Friday closure, what we've actually done is form a change in stay in delivery. Series of up close candles, a series of down close candles, as well as the fact that you have your breaker block right here. Now, I am going to drop another video tomorrow, simply just being higher time frame speculations in terms of what I'm looking to see in relation to all of the markets and assets I'm currently paying attention to. But this daily closure, closing below all of these up close candles right here, displacing through that previous week low as well as that new week opening gap. And then before we move on from the daily chart, we can also again take acknowledgement to how this 30,500 level is being utilized. We're not displacing above it with willingness, we're being rather shy around it. We see Monday's trading, we fail to close above that level. Wednesday we open above that level, so we don't actually close above it. And then Wednesday we open above it, but then we close back down below it. And then dropping down, taking a look at the hour 4 chart, being a whole lot more descriptive, we have that previous week low, previous week high, equilibrium coming in right here, and then we have the weekly opening. So we have the week open, and this is also our monthly opening as well. So the month of June opened where our week opening is. So week opens here, and price action not doing a whole lot of anything. I am going to take a look at the commentary I had over the course of the week. I wasn't posting a lot on the YouTube, and if I'm not posting on the YouTube, I'm generally yapping on the Telegram. So we're going to take a look at the commentary that I had over the course of the week. But we have that week opening right here. We engage with that previous week high, return back down into the range, cracking correlation established, and then we have this very aggressive candle closing above these two down close candles, and then we return back into these two down close candles, but a very, very deep retracement. We close below the mean threshold as well as the lower quadrant of what would be an order block. We then continue that buy side delivery motion from this order block, and then a point of inception is established here above our 30,500 level as well as the previous week high. Now, I actually didn't like this point of inception in terms of I didn't think the framework was as clean as I would like it to be. But upon reviewing it, it's actually not all that bad, because we have this one up close candle here that actually engages with this high, and then we end up closing below this candle, forming an hour 4 change in stay in delivery. The standard deviation that is projected out in price here would be anchored from this candle's high all the way down to this candle's low, and we end up seeing that -2, -2.5 projecting just under the equilibrium of the previous week's range, and then that -4, -4.5 projecting for the new week opening gap below. So we engage with that hour 4 change in stay in delivery. We have no closure inside of it. We continue that deliverance down towards sell side, and then we have price action retracing back up, engaging with this up close candle right here. You can deem this a propulsion block as it engaged with the order block, and we utilize that in a very efficient manner. Naked eye, we don't close inside of it, and then we continue that sell side delivery motion in a very heavy manner. So we have this hour 4 SIBI that prints during Thursday's trading, if I'm not mistaken. And then Friday, we end up engaging with this hour 4 SIBI, and then we continue that sell side delivery motion to engage with the previous week low, as well as the new week opening gap, as well as just displacing a whole lot lower, reaching for this weekly low here as well. So with the Friday's trading, we end up seeing that we deliver into that -2, -2.5. And this serves as a reaccumulation, redistribution of orders. So we end up having a reaccumulation of orders inside of this hour 4 SIBI right here. And then we continue that sell side delivery motion. And then taking a look at the hour 1, we have that week opening right here. Deliverance up towards buy side, engaging with the previous week high. Deliverance back down, cracking correlation, deliverance back up, deliverance back down, deliverance back up. Cracking correlation served here during Wednesday's trading. And we see that there's also a hour 1 change in stay in delivery as well. So very blurry, but these are a series of up close candles right here, series of down close candles, and it's also aligning with our hour 4 change in stay in delivery as well. Standard deviation anchored from this candle's high all the way down to this candle's low. We have our -2, -2.5, -4, -4.5. We can see the alignment with the hour 1 standard deviation and the hour 4 standard deviation. The -2, -2.5 of that hour 1 standard deviation ends up being utilized. We reaccumulate orders inside of this hour 1 SIBI, as well as we can see how that previous week high is being utilized as well. Price action being very shy around it. We just had a candle displaced through this previous week high in the fashion of forming an imbalance. This imbalance is then utilized as resistance to continue that sell side delivery motion. So naked eye, once again, -3.5 coming in somewhere around here, and that is where price action ends up turning back around. Cracking correlation established here with a correlated asset. So Nasdaq fails to engage with this high while the correlated assets engage with this high, and that invites for that sell side delivery motion during Thursday's trading PM session, and then it's continued during Friday's trading as well. So we have Friday's trading opening up, delivering down, engaging with that previous day low, being that Thursday low of day. Cracking correlation was established here under the equilibrium, and that invites for price action to retrace back into this hour 4 SIBI, as well as this hour 1 change in stay in delivery. So we had a series of up close candles, cracking correlation established, and then we have a series of down close candles closing below these series of up close candles. So we can see how the hour 1 change in stay in delivery is being utilized in a very efficient manner. We're not seeing any closure inside of it at all, as well as that hour 4 SIBI. And then paying attention to this segment of price action right here, we're having a consolidation of orders above our equilibrium and around our equilibrium. And we have the Asia high coming in at this candle right here. And then we have London, these series of up close candles engaging with the Asia high. And that forms that high of day for, in fact, it's not even the high of day, because the high of day would have been the 1800 opening, but it would be the high of day in relation to IPDA referencing. So that midnight opening, London forming its high above that midnight opening. So London forms its high, and then we have a standard deviation anchored onto that London leg. So that would be your London standard deviation projection. And we can see that -2, -2.5 projecting for that new week opening gap very nicely. That resides right here. -4, -4.5 projecting for this segment of price action. That resides right here. And then I also have a body standard deviation projected out in price. So simply just anchored to the hour 1 change in stay in delivery, but anchoring it to the bodies. Simply being because deeming this like a very large range in order to anchor a wick standard deviation. It's not to say that the wick standard deviation won't be utilized efficiently or exhausted. Simply want to refine it in terms of intraday order flow, but Friday's trading was very heavy in relation to that sell side delivery. So yeah, that is basically it in relation to the weekly review. I actually feel like that was kind of short. I'm not sure if I have just become rather efficient with these, but yeah, can simply just take a look at the commentary over the course of the week. So a lot of commentary. It starts right here. So some of the trades that I took over the course of the week on the Nasdaq. So in relation to the trades I took over the course of the week, in fact, may even just look at the journal as well. So these would be the trades that I took over the course of the week. So Tuesday, we didn't take any trades. Wednesday, we didn't take any trades. Thursday, we took 2 break evens. And then Friday, we took that EU short as well as that NQ short. And I still haven't journaled these fully, being these 2 Friday trades. The exception I'm having is they were taken on a Friday. I have the entire weekend to, journal them, but that's not really of importance. Over the course of the week, there wasn't really a lot going on. It was really Thursday's price action in which, felt like the most clear. And both of these positions were shorts. The first position was taken during the New York AM session, second position taken during the PM session. And I was simply just trying to align myself with that higher time from order flow. But going back onto the commentary, we have the 1st of June being a Monday, and it's simply just displaying the trade that we ended up taking during Monday's tradings in relation to the trade. And the commentary, I recorded the trade, but it was a high resistance liquidity run, and I had to leave, so I wasn't able to keep the trade recording. And then my limit was set at the true day opening, so I was actually looking to scale the trade out at the true day opening, which did end up getting hit later on in the day, but I ended up closing the trade out fully once we engaged with this high. Reason why being is because all of the assets were very decoupled during Monday. YM was simply delivering sell side, if I'm not mistaken. ES was just not following suit with what NQ was doing. So the assets were very decoupled. And then I de-risked because I was skeptical on the trade, and the skepticism that I had was seeing a high resistance liquidity run. So that was why I was skeptical about the trade in terms of, is this going to deliver or is the trade just going to fail altogether? And then I also mentioned as well as the assets being decoupled. And then I said I was going to do a trade analysis when I was back home. I did say I might. I didn't end up doing it as I was rather busy over the course of this week. But yeah, the next piece of commentary, same day, would have been just observing this weekly chart. So won't be able to do a trade analysis for the trade I took during AM session. And then side point was I was under the impression that we may be set for higher. So I was saying that previously, I was stating how I'd like to see that 30,000 level, max 30,500, serve as a higher time frame retracement. So I'm pretty sure I mentioned these in one of the review videos that I had uploaded in relation to NASDAQ. And I said that currently that is not occurring. Now, to be quite honest, looking at this in hindsight, it was rather early in the week, being the first day of the week. But June had just opened and there was already a hour 4 cracking correlation presented with the formation of an order block, which is what we were paying attention to on the review that we just done for NASDAQ. So looking at the hour 4, this would have been that that Monday's trading. We had that cracking correlation, and then we had the formation of an order block. So these 2 down close candles, 1 up close candle closing above it. And then I simply just stated that would look to see efficient price action if we are going to continue the buy side delivery that we had been under over the course of time. And then I just said that thankfully I am not one to marry a bias. My higher time frame speculations projecting for a time not close to date hold very to little no impact on the way I engage your price on a day-to-day basis. So when I'm doing my higher time frame institutional order flow speculations in terms of where I see price action delivering over the course of the next month to 3 months, those speculations don't hold much weight when it comes to me trading a certain market on an intraday level for a multitude of reasons. But off the top of my head, for one, is that these higher time frame speculations, they're higher time frames, so they're going to take a lot of time to come into fruition, as well as the fact that sometimes that intraday order flow does not currently support those higher time frame speculations at that current point in time. So it may mean that maybe higher time frame speculations, I'm bullish and I'm taking shorts over the course of a week. Simply that intraday framework supports shorts. And then taking a look at the chart that I sent in as well, this would have been the chart. So this, I am going to touch on the higher time frame speculations on a different video across all of the assets and markets I'm currently paying attention to. But this is what price action was looking like June 1st, being that Monday. So we had that 30,000 level, naked eye, 30,500 coming in somewhere around here. You can see price action, it appears as though it just wants to continue delivering up towards buy side. We had just engaged with that weekly BISI, and then we're beginning to expand again towards buy side. Devil's mark being printed. We know that this is a signature, meaning one of two things. Price action is very heavy in relation to that one-sided order flow, or it's simply a drawn liquidity for a later point in time, which is what ended up occurring over the course of this week's trading. So that devil's mark being printed can be viewed as the engineering of the sell side. So it can be viewed as a very strong drawn liquidity. And then same day, posted that same chart. I said, I'm simply just going to look to adhere to this chart. So in relation to what that means is if we are to continue this buy side delivery motion, if intraday supports that buy side delivery motion, I'm simply going to say, okay, we're going to 32,250 as well as that 32,500, because that is where a monthly standard deviation anchor to the body is projecting for. But with the acknowledgement that this weekly standard deviation is promoting the fact that this may serve as a point of inception to return back down into the range. So if those signatures establish themselves, would also look to adhere to that as well. And then the next day would have been Tuesday, and I simply just sent in this chart being the hour 4 chart, ... And basically what I meant by this is Tuesday opened up here on this candle, 1800, heavy deliverance back down into this order block. You don't like to see this in a case of bullish order flow. We shouldn't be closing below the mean threshold of bullish order blocks. We shouldn't be closing below the consequent encroachment of bullish imbalances, because it does not support that bullish order flow that we're looking for. To be honest, I'm not quite sure why I didn't actually expand on this, just ... I guess I just knew what I meant. It was only 11 a.m. being 10 to 6 New York Eastern time. But yeah, that was the commentary for that. And then the next piece I sent in would have been in relation to BTC and Ethereum. Now, I also need to update BTC and Ethereum in relation to the deliverance we've been having over the course of the past week and a half or so. So simply just said, like a page from a book, price action unraveling out very nicely on Ethereum. And then I'd been alongside Ethereum for a hot minute now, and the algorithm is delivering in accordance. So for a rather long time, to be quite honest, I don't even remember when, but we'd simply just been seeking that sell-side deliverance on Ethereum to engage with that February low of the month. Now, in relation to Ethereum, I'm not going to touch on it too much because this is a review for NASDAQ, but I was speculating that February, once that is engaged with, it may serve as the low of the year. If BTC failed to follow suit by engaging with the correlated low, but at this current point in time, BTC has also engaged with the February low of the year, so separate video needs to be made on that. And then the 3rd of June being a Wednesday, there was no commentary, so it's straight to the 4th of June being a Thursday. First image sent in would have simply just been Ethereum engaging with that February low of month. And then the commentary was specific things need to occur in order for the low of the year to form. And I said that I'll look to update for the end of day today. Did not do that. Not been on, P's and Q's over the course of this week, but simply just been busy and gonna look to do that, well, by tomorrow, like I just stated. But that was the commentary for that. And it just sent in a picture of Ethereum, and that was the picture with BTC and Ethereum side by side. But this is an NQ review, so we're not really going to touch on that too heavy. So same day being the 4th of June, a Thursday, traded the New York AM session, and this was a break even. So inception continuation, simply stated that I was aware of the Kraken correlation, so there's a pool of sell side right here, and NASDAQ delivered into it. ES failed to follow suit. I was aware of that Kraken correlation, so I moved to break even once that Kraken correlation presented itself. And then I sized down to engage with the day because Thursday was the day ahead of NFP, and Thursday also had no high impact news. And as we know, these type of days are generally utilized to engineer both sides of the market or just one side of the market. And especially if there's no high impact news on that day, you can look to expect very poor price action going into that day. So it's normally a day that you'd want to thread with caution in terms of looking to de-risk on the positions you're taking, or even staying away from the day entirely, or looking to manage the trades rather aggressively, or look to take low-hanging fruit altogether. Image of the trade sent in along with that commentary, took that short position at the 10 a.m. opening, and then got break even maybe like 10-15 minutes later. And yeah, that was it for that trade. Didn't do a trade analysis for this or upload the executions because it was a break-even trade, and once again I was rather busy over the course of this week. But the second trade I ended up taking would have been during the New York PM session, and I was looking for a short position, and this time I ended up taking this on the NQ contract. Reason why being is because the risk required wasn't as much as the risk was required here. I actually even forgot to touch on that as well. The risk required here would have been around maybe 45 points in terms of where the stop loss had to be for a valid stop loss. And then considering the fact that it is the day before a high impact news event being NFP and there's no high impact news on this given day, would look to manage risk accordingly. So simply took a short position during the PM session and got break even again, not much commentary on it, and this would have been the position. And then the next piece of commentary being the exact same day was a little later, so it was when we had that deliverance down towards sell side. So I had the right idea and seeking that sell side delivery. It just was not when I was looking to see it occur. The move that I was initially in delivered 45 points, and then it took me a break even. And break even was permitted in terms of it was valid for me to go break even. If my break even was to be hit, it would mean that the idea was no longer valid, as it would have taken me out fully, in which it did. So taking a look at the trade, naked eye, very blurry, but entry was right here at this inversion fair value gap. If I wasn't break even and I was to hold this, keep my stop loss where it was, it would have taken me out fully. So the break even was permitted. There would have been no reason for price action to take me out break even unless the idea I was trading under was wrong, which is what occurred. And then I then stated that this entire week had simply just been filled with break evens and no trades. Now, a little tangent. Over the past 2 weeks, in fact, that has basically been what NASDAQ has been for me. And I'm a predominantly NASDAQ trader when it comes to the markets I like to indulge in. NASDAQ is the market I like to indulge in the most. It is the market that I indulge in the most. Now, over the course of my journey with trading, I began to notice that certain times of the year, price action isn't delivering the way it is during other times of the year. And this is due to seasonalities. And this then prompted me to explore different markets. And that curiosity led me to realize that during certain times of the year, different assets and markets are open for me to trading, as they will present what I generally like to see on the NASDAQ, since NASDAQ wouldn't always generally offer it. Which is why on Friday's trading, I engaged with Euro USD. So it is generally the time period anywhere from June all the way up until August that I am engaging with different markets. This will be gold, Euro USD, and crude oil. This is when I'm indulging in those markets on a lot more frequent basis. But back on topic, then further went on to say that still have NFP Friday tomorrow, so we'll look to see if we can close the week nicely. And then I said that I'd not been actively posting on YouTube for daily reviews and trade reviews, but I will be active next week. I wasn't even going to do anything over the weekend, and then I low-key realized how much work I had to do. So I said, yeah, Fridays, let's get active type of timing. But jumping into the next piece of commentary, which would have been Friday's trading, so NFP Friday. The first piece of commentary would have been Euro USD, where we took that short position. So pre-New York AM inception model. Then I was stating that I do indulge in other assets, and this is dictated by seasonalities, and I will touch on it on the next YouTube video. So I touched on it small here, but not really to the fullest extent. But this was the image sent in with that commentary, and it was just the short position that I ended up taking during that pre-New York AM. And then later on in the day, sent in another execution on the NASDAQ New York AM inception continuation model. and I'd missed the inception for the lower time frame, which would have been a higher time frame inception continuation model. And then I took the inception continuation in relation to the lower time frame market maker model and utilized a 5-second entry. Now, honestly, reading back over this may actually sound very confusing to someone who isn't familiar with what I am talking about. Briefly going over it, inception that I was referring to would have been here. This would have been where I would have liked to be located. I was watching YouTube. That is quite literally the only reason why I missed this, if I'm being completely honest. But this is where I would like to be located. Missing this, the next position would have been here. This is also a valid point to be located. In relation to this point of inception, this would be a 15-second, 5-second entry. This would be your M1 inception model entry right here. I missed both of these. And then upon jumping back onto the charts, I took a notice to how nice price action was delivering, and I simply decided to join in on the market maker model that was unraveling out during this sell side delivery. And then the next piece of commentary that I sent in would have been during the same day again. Sent in a weekly chart, and I stated, let me not get too excited just yet, that 30,500 level is serving as a form of resistance. And I stated in NQ reviews and overviews that a higher time frame retracement should occur at the 30,000 level, max 30,500. And right now, it's merely just a waiting game, and I'm looking to observe what the price action does on the daily time frame as well as that hour 4 time frame. And then I stated the fact that the hour 4 has already put in a point of inception during Wednesday's trading, which is what we were taking a look at on the review. So taking a look at that hour 4 chart, this would have been that point of inception that was established during Wednesday's trading. And I'd simply been following that point of inception that was established on the hour 4, but I did not like how that point of inception formed. And I then mentioned if the daily follows suit, it would be very insightful as to how quarter 3 should be approached, because we are rolling into quarter 3. If I'm not mistaken, the end of June, that's when Q3 starts. And then I just elaborated on the excitement statement in terms of the excitement was merely because we may be finally getting a retracement back into such an overzealous range delivered towards the buy side. So paying attention to this weekly chart, this is very, very overzealous in terms of it's very eager to deliver towards buy side. We're not having sufficient retracements back down into the range, even on the daily time frame as well as that hour 4 time frame. And then the next piece of commentary would have been end of day. So I wasn't home at this time. I was actually out speaking to one of my friends about the markets, and it reminded me, let me see how the week has closed. And then I see that we had formed a daily change in stain delivery that we were just mentioning on the weekly review. And then the commentary was, it's like giving a chocolate cake to a fat kid. Daily change in stain delivery, body standard deviation anchored to that change in stain delivery, and then that 30,500 level serving as a point of resistance. And then taking a look at that chart, we have the series of up close candles, series of down close candles right there, change in stain delivery. Now, I'm not going to touch too much about the speculations or projections that I have over the course of the next week as well as month. Once again, simply just going to save that for tomorrow's video, being that higher time frame institutional order flow speculations. But that would generally be it for the commentary over the course of this week. And then the last thing can simply do is just take a look at the journal in relation to the outlooks I was having pre-sessions as well. But with the Telegram, since I wasn't posting much on the YouTube, Telegram is rather unhinged, if I'm being completely honest. Yeah, it's a lot of yap. Sometimes, I'm talking about the charts, it's, more sophisticated or, professional in a sense, and then it's just unhinged. A lot of note to selves in it. Sometimes I'm talking about the psychological elements of trading, but I honestly just view the Telegram as a form of journaling as well as the YouTube channel as well. The YouTube channel is really just more of a structured as well as professional format of journaling, public journaling to say more accurately. But taking a look at the journal over the course of the week, simply just looking at the pre-session outlook. So could take a look at the pre-session outlook for Monday. So we're observing that daily chart. We have that deliverance engaging with that previous month high, which would also be that previous week high as well. engaging with that 30,500 level that comes just under the previous month high. And then the hour 4 chart, this is what the hour 4 chart was looking like. These screenshots were taken just 20 minutes ahead of the 9:30 opening. The hour 1 chart, and that was what it looked like. And then the 15-minute chart. So the entire of the previous week's range, we have that devil's mark being that previous week low and then that previous week high. And we can take a notice of the fact that, okay, we had that midnight opening right here, very shy price action around it, deliverance down towards sell side. In the -2, -2.5, we have an accumulation of orders. We don't sufficiently reaccumulate orders, and we continue that sell side delivery motion, which is what prompted that buy side delivery motion for the New York AM session where I took that long position. And then just getting a closer look of that M15 chart right there as well. And then in relation to the notes, higher time frame institutional order flow was clear, being bullish, but price action was also located in that -4, -4.5 standard deviation, and engaging with that round figure institutional level being 30,500 and being shy around it. And then the hour 4 been following suit with that buy side delivery motion. And then the higher time frame drawn liquidity, I was deeming it sell side, so the relatively equal lows above the new week opening gap. And then I was saying that there's no drawn liquidity at buy side. So if I was to continue seeking that buy side delivery motion in relation to higher time frames, there was no higher time frame drawn liquidity relatively close to intraday that I could say we could deliver towards. And then no higher time frame PDOA was engaged with. And then intraday order flow was clear, being bearish, cracking correlation presented at buy side with time-based liquidity. Trendline phantom under the midnight opening from Friday's price action, and then we were expanding towards sell side, and then the news we had was 10 a.m. news as well. And then the trade that was taken was that 10 a.m. long, very high resistance manner, and we end up seeing that true day open being engaged with shortly after I collapsed the position right here. And then taking a look at Tuesday, no trade on Tuesday. I guess we can look at what permits or what invites for me to not take a trade in relation to a pre-session outlook. So taking a look at that daily chart, price action, not really doing a whole lot of anything, but we can take an acknowledgement into how that candle had printed, being that daily candle for Tuesday. It looked like an indecisive candle ahead of our 9:30 opening. And then looking at the hour 4, there's not a lot of anything here on the hour 4. Hour 1, again, we're simply just meandering, buy side delivery, sell side delivery, buy side delivery, sell side delivery, buy side delivery. And then the 15-minute chart encapsulating the entirety of the previous week's range. And then a closer look of that, we had that Monday's trading, 10 a.m., low of day, delivering up towards buy side. And then we have that deliverance down towards sell side, again, deliverance up towards buy side. I think this may have been a London standard deviation, I'm not quite sure. Yeah, London standard deviation anchored here on the M15. And then in relation to the notes, a higher time frame institutional order flow remains bullish, but then the hour 4 is slipping into a phase of consolidation. So we're paying attention to that hour 4 slipping into a phase of consolidation. Now, the thing is, a small little tangent here, in relation to higher time frame institutional order flow remaining bullish, we're paying attention to that daily, weekly, monthly. Hour 4, you can deem it higher time frame. It's the closest you can get to institutional, that is also relatively close to intraday. But before we begin to see the monthly, weekly, and daily begin to show bearish order flow, we're going to see it on the 15-minute, hourly, and the hour 4 as well. So the first sign was the hour 4 slipping into a phase of consolidation. And then in relation to higher time frame drawn liquidities, there was none that I could deem on Tuesday's trading. Higher time frame PDOA engaged with would have been the hour 4 rejection block. Intraday order flow was bullish. So we have that midnight opening coming in right here, simply been bullish from that midnight opening. And then there was no clear intraday drawn liquidity. Now this one is very heavy. When there is no clear intraday drawn liquidity, more time, there's not really much for you to do. It requires more data to print, meaning it requires a lot more time to elapse over the course of the day in order for you to say, oh, this seems like a clear draw on liquidity. That would look like waiting for the PM session to start, and you're referring back to the New York lunch session as well as the New York AM session. And then the delivery phase, we were retracing back into the range, and there was no high impact news on Tuesday. So that is essentially just what permitted for me to not take any trades. And then Wednesday, again, the exact same situation, no trades, taking a look at what permitted for it. So taking a look at that daily chart. Again, price action, if we're observing this daily chart, this screenshot is taken 20 minutes ahead of our 9:30 opening. The daily candle is indecisive ahead of our 9:30 opening. The exact same thing that occurred during that Tuesday's pre-session outlook. And then observing that hour 4 chart, very high resistance deliverance up towards the buy side. And if I'm not mistaken, there was a cracking correlation that presented itself here that would have been marked for Thursday's pre-session outlook. So this high engaging with this high right here. And then taking a look at the hour 1, we had the engagement with this high, and observing this price action, if we are to go back and take a look at the weekly review on the hour 1 chart, that is the price action we're observing Wednesday's trading. We end up seeing how we actually do have that hour 1 change in sustained delivery. We did not have that ahead of our 9:30 opening. It ends up presenting itself at a later point in time. And then taking a look at the 15-minute, same structure, the entirety of the previous week included, and then just a lot more closer price action being projected. So seeing very heavy high resistance price action towards buy side. All of this TLP residing all right here. And then in relation to the commentary, higher time from institutional order flow clear, simply just stated that higher time from institutional order flow remains bullish, but the hour 4 is serving high resistance deliverance towards buy side. No clear higher time frame drawn liquidity, no higher time frame PD array engaged with. Intraday order flow bullish in a high resistance manner, and assets are decoupling. Again, this is a red flag. A lot of red flags being presented here in terms of, okay, the hour 4 is serving high resistance deliverance. There is no clear higher time frame drawn liquidity that we can look to trade towards on the lower time frames. There is also no higher time frame PD array engaged with. And then intraday order flow is serving in a high resistance manner, and the assets are decoupling. The decoupling of assets is just not nice. It's a lot more easier to stay away from the markets when assets are decoupling. Experience is needed in order to trade a market when correlated assets are decoupled. And then there was also no clear intraday drawn liquidity. Again, another red flag. And then we're retracing back into the range. And in relation to high impact news, we had a high impact news at 8:15 and 10 a.m. And then taking a look at Thursday, where we took 2 break-even trades. So the pre-session outlook for Thursday, we're taking a look at that daily chart. So we see that Wednesday ended up closing bearish. And now that I'm even realizing I did this one late, this was taken at 9:36. So I journaled after the 9:30 opening. And then observing that hour 4, so now we have that cracking correlation that had been marked out. And this is what I was mentioning in relation to the commentary for, so the commentary that I was posting on Friday, I mentioned that hour 4 served the point of inception, and I'd been following it over the course of the week. So you have that point of inception established, and then standard deviation can be projected out in price, -2, -2.5, -4, -4.5. Now, if you have watched the weekly review I did on NASDAQ, oh wait, no, this is the weekly review. It's 2 a.m. in the morning, so yeah, brain's a little bit fried. But I don't actually, when it comes to me observing the markets, annotating the charts, I don't annotate a lot in terms of, I don't like to see a lot of drawings on my chart. With the weekly review that I just did 15 minutes ago, a lot of annotations are plotted on the chart in terms of this being an order block, inversions everywhere, X, Y, and Z, cracking correlations. I normally don't like to see all of this stuff in my chart. I like my chart to be as naked as it can possibly be, and I'm simply just taking a mental note of these levels in terms of, okay, we've delivered from here, it's been efficient, this is now a propulsion block, X, Y, and Z, da 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 da. And then taking a look at the hour one chart, have that hour one standard deviation anchored from this candle's high all the way down to this candle's low, -2, -2.5, reaccumulation of orders inside of this hour one imbalance, continuing that deliverance down towards sell side. And then we have that M15 chart, and then a closer look at that M15 chart here. So we have Thursday's trading, 1800 opening up right here, very lethargic price action, and then we have very heavy deliverance down towards sell side ahead of our New York AM opening. So in relation to the notes for Thursday, would have been higher time from institutional order flow remains bullish in regard to the weekly but daily retracing. So now I'm being a lot more specific because more data has printed over the course of the week. And then I'm stating that the hour 4 is slipping into a phase of consolidation and a high resistance liquidity run towards sell side. So I was deeming this a high resistance liquidity run. In hindsight, it's not all that high resistance, but yeah. And then there was no clear higher time frame drawn liquidity, as well as the fact that no higher time frame PD array had been engaged with. Intraday order flow was bearish, so we could take a notice of the fact that, okay, 1800 opens here, we form a high, and then we deliver down towards sell side. We have this large imbalance that resides right here, displacing through the monthly opening and deeming this order flow bearish in relation to intraday. And then stated that there's no clear intraday drawn liquidity other than the previous week low and the relatively equal highs above the previous week low. So that would be the previous week low that resides here, bottom left, and then these relatively equal lows that reside just above it. So I was deeming that the drawn liquidity while price action was right here. Now, I wasn't deeming it a clear drawn liquidity as there was still a lot of range for price action to go in order to reach there, as well as the fact that I didn't have any standard deviations at that time that were promoting or inviting for the fact that, yeah, we can look to seek this sell side delivery all the way down here. And then no high impact news for Thursday's trading as it was the day before high impact news. So took that short position, was simply just looking to align myself with that bearish order flow, as if we observe the hour one chart, we end up taking notice to the fact that, again, honestly, I don't know if it's just mad late. I'm not sure if this is the same day, but this is journaled after the 9:30 opening. But we can take a notice of the fact that 9:30 opens, we deliver into this hour one imbalance right here. So I was simply just looking to align myself with that bearish order flow. So 9:30, we have that deliverance up into that hour one imbalance, and simply just need to use your imagination. Hour one imbalance right here. We have a nice change in stain delivery utilized, and then we deliver down, we deliver back up, cracking correlation right here, and this would have been a inception continuation model. Inception would have been right here, but we didn't engage with that change in state, so I simply just watched this move deliver down towards sell side. We retrace back up. I'm paying attention to this change in state. Are we going to utilize it efficiently, in which we end up doing? And then we deliver back down, closing below these two up close candles. Now, entry could have served right here. I wanted more framework in order to align myself with it. I'm under the notion that, okay, this is a day before NFP, as well as the fact that there is no high impact news. I'm already taking all the precautions needed in order to navigate the session accordingly. So we have the formation of this order block, and then we end up retracing deep into this order block, engaging with the rejection block, and then we end up having the inversion of this BISI right here, which is what I ended up entering off of. Now, simply just paying attention to this chart right here. This is the day before NFP. Very sloppy price action that is occurring right here. In an efficient market where price action is primed to move, after the engagement with this change in stain delivery, and then we have the formation of this order block right here, we should engage with it and simply just snap down, continue that deliverance down towards sell side like we did right here. But we didn't do that. We retrace very deep, but we don't invalidate it. We don't invalidate the entire motion that is being unraveled out. So yeah, simply shorted off of the inversion fair value gap and then got break even. So with this short, we ended up engaging with this low, and cracking correlation was established there, and that is where I look to move break even. And that would have been what I was mentioning in relation to the commentary over the course of the week. So I moved to break even once that cracking correlation presented itself. And then taking a look at the PM session for the execution. So there's no outlook here because I've already done one for the AM session. So I'm already aware of, what the day has done. It's simply just a case of me looking at what has occurred over the course of time and then navigating accordingly. So short position would have simply just been executed off of this inversion for value gap right here, looking to see that sell side delivery motion. So I'm pretty sure the New York lunch low, New York lunch low would have come in right here. Wasn't looking to target the New York lunch low, simply looking to see deliverance under the equilibrium of this given range, as well as the fact that that equilibrium aligns very nicely with the midnight opening. And then taking a look at Friday, I'm gonna ignore EU because again, this is a review for NASDAQ, but we have, and I also need to journal this fully, but pre-session outlook, observing the daily and taking note of the fact that that daily open is very shy. It's basically a devil's mark. We open, immediate deliverance down towards sell side. And then observing the hour 4, still following suit with the point of inception that established itself on Wednesday's trading. We have the standard deviation projected out in price. We have the engagement with this hour 4 SIBI. And just like I was mentioning previously, I'm not going to annotate imbalances in price action. I'm just aware of them. I don't like too much things on my chart. But observing this chart, we have this imbalance right here, and we also have this imbalance right here as well. And then taking a look at the hour 1, we have that standard deviation that was anchored from Wednesday's trading, still following it, -4, -4.5 engaged with cracking correlation. And then we have the reaccumulation of orders inside of the hour 4 imbalance that resides right here. So we reaccumulate orders as well as engaging with this order block right here. So this change in sustained delivery during the London session, and then an order block right here. So again, it was rather busy this week. Journaled this after the 9:30 opening, and I wanted to see if 9:30 could open and deliver into this order block to continue that sell side delivery motion. That would have been very nice, but we didn't actually end up doing that. And then observing the 15-minute, taking a closer look of it. So yeah, not really much here on the 15 minutes to be quite honest, but in relation to the notes, higher time frame institutional order flow had become unclear. So the entire week I was stating that it was bullish, but now we are beginning to deliver towards sell side as if it's now bearish. So I'm waiting for more confirmation for me to become one-sided in a sense. I then state that we're beginning to deliver down towards sell side on the daily and the hour 4. The weekly remains bullish for now. Not much to work on with the daily, but the hour 4 is clearer. So observing that hour 4, we can see, okay, we engaged with that change in state, and then we engage with the propulsion block during this candle, and then we also engage with this imbalance right here. So we're seeing clear order flow, bearish order flow in relation to the hour 4 chart. And then I was stating that there was no clear higher time frame drawn liquidity. And then the PD array engaged with was hour 4 SIBI during London. Intraday order flow being bearish from that London deliverance. And then intraday drawn liquidity would have been Tuesday's 9:30 regular trading hour gap and the new week opening gap. So taking a look at it, I have to do the bigger chart. So this would have been Tuesday from the 26th of May. We had a regular trading hour gap. So this gap was not filled. That opening range gap was not filled efficiently. Simply just looking at that to serve as a drawn liquidity during regular trading hours. Because we may fill the gap, but we may not fill it during regular trading hours, being 9:30 all the way up until 4:15. So when we're observing the regular trading hour chart, that gap is still unfilled. So that was what I was deeming a drawn liquidity, as well as the new week opening gaps. Very faint orange quadrant layered out in price, projected out in time, being this gap that resides right here. So that would have served as the intraday drawn liquidity, and then expansion towards sell side, and we had NFP at 8:30. And yeah, still need to trade this fully. That will be done tomorrow, but yeah, that is basically it in relation to the weekly review for this week. To be honest, I'm not quite sure if I'm missing anything. It's rather late, I'm rather tired, but yeah, that is it.